Welcome to Woods of Stardon. This is CH. I will be covering the iShares MSCI Asia ex-Japan Climate Action ETF that has the SGX codes ICU and ICM in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the FSSA Dividend Advantage Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos, and I'll be happy to work on it as long as I can find enough information on the product. iShares was originally created by Barclays Global Investors, who decided to aggressively grow the ETF business in the year 2000 and officially branded their products with this name. In 2009, BlackRock bought over the entire Barclays Global Investors business segment, including iShares from Barclays. The offerings under iShares grew significantly over the years and are today a notable contributor to the overall business of BlackRock. BlackRock, through iShares, is the largest ETF provider globally with a massive $5.5 trillion of AUM across 1,700 ETFs. Of this, over 700 ETFs totaling about $1 trillion AUM are domiciled outside of US to cater for different demands from global investors. Given the vast number of products, iShares ETFs today provide a comprehensive coverage across most asset classes and investment themes. The iShares MSCI Asia ex-Japan Climate Action ETF is one of two sub-funds under the iShares Southeast Asia Trust Fund family. This fund family is set up as a Singapore umbrella unit trust structure. The ETF is listed on the Singapore Exchange with the SGX code ICU for its base currency US dollars version and ICM for its alternative tradable currency Sing dollars version. There is unfortunately no information on any investment managers or investment teams stated for the iShares MSCI Asia ex-Japan Climate Action ETF. While this is a passive index tracking solution, I think it would still be good for iShares to provide investors a bit of information on how the investment teams are organized in the firm and where this product falls under. The iShares MSCI Asia ex-Japan Climate Action ETF passively tracks a benchmark index that is the MSCI AC Asia ex-Japan Climate Action Index. Let's go through the index to understand it better. As the name implies, the MSCI AC Asia ex-Japan Climate Action Index is a subset of the broader MSCI AC Asia ex-Japan Index, which we will normally refer to as the parent index. The MSCI AC Asia ex-Japan Index covers about 1,000 large and mid-cap stocks across 2 developed markets countries and 8 emerging markets countries, representing about 85% of the free float adjusted market cap in each country. Given the significant growth of AI-related stocks in recent years, the index is currently about 50% in information technology by sector and mainly in Taiwan, South Korea, and China by country. The MSCI AC Asia ex-Japan Climate Action Index, as mentioned earlier, is a subset of the parent index. It applies both exclusion screening and weight adjustment processes to the underlying stocks from the parent index using the MSCI Business Involvement Screening Research and MSCI Climate Change Metrics. Exclusion screening comes in 4 parts. There are controversies score eligibility, controversial business involvement eligibility, GHG intensity eligibility that measures carbon emission levels, and carbon risk management eligibility. Companies that fail in any of the four screenings are excluded from the resulting index. The remaining stocks are then assigned a tilt score that indicates how well they qualify in terms of relevance to the climate action objectives. The tilt score leads to the weight adjustments of the stocks and sectors, with a limit relative to their weights in the parent index. The limits are actually quite small, with a 2% cap at stock level and a 5% cap at sector level, so we would not see significant differences between the weights in this index versus the parent index. The exclusion screening removes about 290 stocks from the parent index currently, meaning the resulting climate action index is still decently diversified with over 700 constituents. Top constituents are broadly similar, with the AI-related chip makers and Tencent and Alibaba still leading the pack, although weights are slightly different. For example, the Climate Action Index actually has even higher concentration in TSMC and SK Hynix, while lower in Samsung Electronics. Country allocation-wise, the Climate Action Index has slightly more Taiwan, offset by slightly less South Korea, China, and India. Sector allocation-wise is even more similar. There are very small variations in the numbers that I don't consider as meaningful differences. So the exclusion screening and weight adjustment processes have not really resulted in any big changes in the portfolio of the Climate Action Index. That being said, there is actually a huge disparity when we look at the performance of the two indices. The Climate Action Index delivered near identical returns as the parent index from 2018 to 2024, as would be expected since the portfolios appeared quite similar. However, the Climate Action Index underperformed significantly by 10% in 2025 and 15% in 2026 year-to-date till end of June. We saw earlier that the country and sector allocations between the two indices are broadly similar, so they should not be the main reasons for the performance differences. I browsed through the top 30 holdings in the two indices, and they are also broadly similar, with the exception of two China banks being excluded in the Climate Action Index, although their weights are not high and therefore should also not be the main reasons for the performance differences. Holdings beyond the top 30 have very small weights, so having about 300 lesser holdings also should not lead to such big performance gaps. Therefore, the only plausible explanation that I can think of is the weight allocation differences resulting from the Climate Action Index methodology, whereby stocks that had done better in the past 2 years somehow got lower weights than what they have in the parent index, and vice versa. As such, what we can conclude so far is that the Climate Action Index methodology so far has unfortunately not added value historically, but has instead been detrimental from a performance perspective from 2025 onwards. As mentioned earlier, the iShares MSCI Asia ex-Japan Climate Action ETF is a passive index tracker with the investment objective to track the investment results of the MSCI AC Asia ex-Japan Climate Action Index. To be more specific, the prospectus states that the ETF aims to invest at least 95% of its assets in achieving the investment objective, that is measured in US dollar terms. The base currency and the main trading currency of the ETF is therefore US dollars. The 95% requirement provides some leeway for the ETF to hold cash equivalents to handle trading liquidity needs. The ETF adopts a representative sampling strategy. That means it invests in a subset of the benchmark index portfolio, where the ETF manager deems is still able to generate a similar risk and return experience as the index itself. Representative sampling strategy is common in ETFs, especially for Asia and emerging market strategies, whereby assessing certain markets and stocks in order to replicate the index may be difficult due to liquidity or regulatory constraints. Given this strategy results in a slightly different portfolio, the ETF is expected to have some tracking error versus the index, and we will see later whether this is significant. The iShares MSCI Asia ex-Japan Climate Action ETF was incepted and listed on the Singapore Exchange in September 2023, giving it almost 3 years of track record. AUM is nearly 800 million US dollars, which is pretty decent for an ETF listed in Singapore, probably because the US dollar-based currency helps to attract investors in the region. The ETF has about 640 stocks in the portfolio, which is about 10% lesser than that in the benchmark index. The ETF webpage allows for downloading of the full holdings, which is good. As shown here, there are small differences in the weights of the top 10 positions, but not significant. So the ETF appears to be replicating the index quite closely, despite using a representative sampling approach. The ETF webpage provides the latest sector and geography breakdown data, which is towards end of July as I am preparing this video. Unfortunately, there is no June data as the ETF fact sheet is dated only end May, so I can't do a comparison with the June data of the index fact sheet. This is rather irritating, but I can only work with what I have. Given the ETF is a passive strategy and appears to replicate the index quite closely, we can assume that the sector differences seen here are mainly due to the market and stock movements in July. The more notable changes we can see are that technology sector has reduced, while financials, communication services, and consumer discretionary sectors have increased. Despite these changes, this portfolio is still heavily driven by technology and communication services that comprise more than half of the allocations. Geography breakdown-wise, given quite a number of AI-related stocks in Asia have undergone roller coaster rides in July, we can see the allocations of South Korea have been reduced the most, followed by China and Taiwan. As a consequence, India and Hong Kong allocations have increased slightly. Given BlackRock is an advocate of sustainability data provision, the ETF webpage also provides some sustainability statistics based on MSCI methodologies. Interested investors can find out more in the ETF webpage. As I am focusing ultimately on the performance of the ETF, and there is so far no evidence that the methodology used by the benchmark index is able to translate to better returns, I will not elaborate on these statistics in the video. The iShares MSCI Asia ex-Japan Climate Action ETF comes in only one share class that is accumulating US dollars. It however allows trading in Sing dollars that is basically a daily FX conversion from the US dollar price. There is therefore only one ISIN for the ETF, but two SGX codes, with ICU for US dollar trading and ICM for Sing dollars trading. As expected, almost all the trade volume are for the US dollar version. There is no currency hedging for the Sing dollars version, so over time there will be some performance differences between ICU and ICM, as shown in the Morningstar chart here. Interestingly, because the underlying portfolio is Asia equities, and the Sing dollars has various Asian currencies in its pegging basket, the resulting performance differences is sometimes not significant. For example, if we zoom in to past 1 year chart, we can see ICU and ICM have delivered very similar performances through the year. The iShares MSCI Asia ex-Japan Climate Action ETF provides returns data for calendar years and various time periods, and including benchmark returns. While the ETF has slightly less than 3 years of track record, and therefore not much data is available, we can see that the ETF has been improving its tracking error over time, with minimal differences versus the benchmark in the past 1 year. From a product design perspective, the ETF is therefore doing a good job tracking the benchmark index accurately. Therefore, the main concern for investors is the relative underperformance of the Climate Action Index versus the broader MSCI Asia ex-Japan Index that we went through earlier. Using ETFs to represent the two indices in this chart, we can see the main performance gap started in October 2025, which is the time when the South Korea stock market started its AI-related roller coaster journey. To be fair, ICU isn't the worst performer in its category. The sustainability community hasn't been able to agree to common standards, so there are multiple indices created to cover the same markets, but using different screening or filtering criteria. For example, the X-Trackers MSCI AC Asia ex-Japan ESG Swap UCITS ETF tracks a slightly different MSCI index and so far has had a weaker performance than ICU as shown in this chart. With that, let's summarize our findings. iShares is well known to be the ETF market leader and is part of BlackRock, the world's largest asset management firm. There is no doubt in the resources available for iShares to continue innovate to create new investment product ideas and improve existing ones. There is no information available on the fund manager and investment team. While this is a passive solution and therefore not reliant on active management, providing some information on the investment team can help investors understand where this product falls under within the enormous BlackRock organization structure. The iShares MSCI Asia ex-Japan Climate Action ETF is a passive indexing solution tracking the MSCI AC Asia ex-Japan Climate Action Index. The fund uses a representative sampling approach and has been able to track the index closely with improving and minimal tracking error, especially in the past 1 year. The index is a subset of the broader MSCI AC Asia ex-Japan Index. The ETF is listed on the Singapore Exchange, which is not as popular as those listed in US or Europe. The US dollar base and trading currency of the ETF, however, has managed to attract enough investors for it to get around 800 million US dollars of AUM. Sing dollars trading currency is also available, although there is minimal demand for it. The index methodology details are readily available in the ETF prospectus and in the MSCI website, providing explanations on the screening and constituent weight adjustment processes. That being said, these processes have created an index that actually is not significantly different from the parent index. While the screening reduced the universe from about 1,000 stocks to 700 stocks, the resulting index portfolio is still highly similar in geographic and sector breakdown, as well as top holdings. This resulted in the index having near identical returns versus its parent index from 2019 to 2024, suggesting no meaningful benefits of having the screening process from the portfolio diversification and performance perspectives. Additionally, the index seems to have missed out much of the participation in the AI-related momentum flows into the Asia equity market since 2025. While much of the heightened volatility was avoided, the market upside participation was also missing, leading to significant underperformance versus the parent index from October 2025 onwards. In conclusion, the iShares MSCI Asia ex-Japan Climate Action ETF has done a decent job so far as a passive index tracker. The main problem lies with the underlying index, that is the MSCI AC Asia ex-Japan Climate Action Index, whereby its methodology has not provided any evidence since 2019 for a better investment outcome compared to just going for the broader parent, that is MSCI AC Asia ex-Japan Index. Investors should therefore consider going for a solution that tracks the parent index instead. This concludes my absolutely biased comments on the iShares MSCI Asia ex-Japan Climate Action ETF that has the SGX codes ICU and ICM, and I hope it will help in your investment journey. May we all grow wiser and prosper.